a lot's happened in the world of easy crypto. I note that you're in Brazil, you're in South Africa, Australia, New Zealand, but also you've had some fun. You've done a funding round. So do you want to give me maybe a lightning fast sort of recap of the history of easy crypto, if you can?
Lightning round in easy crypto. So we started in 2017, very end of that last big bull run that we had. My brother and I co-founded Easy Crypto, and we were just keen to make it easy for Kiwis to get involved and get into the cryptocurrency market. So we started in New Zealand, found really great audience here in New Zealand, a lot of people really keen, and we thought, hey, look, we've built this business that helps New Zealanders, maybe we can help more people. So we started expanding out internationally, as you noted, Australia, South Africa, and more recently Brazil. And then we decided we needed maybe a bit of funding to help us with that journey. And we went out and raised a Series A last year. And have to say, in hindsight, the timing of that could not have been better. The crypto, I think VC funding everywhere has dried up quite a bit. Valuations have dropped. And it's been, really good for us that we had those funds locked in. And now we've got a really nice period, hopefully over the next year or two, with a bit of a crypto winter. I'm really looking forward to that as a good time for us to build and really do a lot of great innovation and just work on really awesome products. So.
Like, we'll talk about crypto in a second and Bitcoin in particular today, but for our audience, so they understand what easy crypto is, I often describe it as basically like a crypto supermarket, but how would you describe it in proper professional words?
Supermarket's a good call. I mean, I describe us as a cryptocurrency retailer. So we're an online shop that you can come to. You can buy different cryptocurrencies. We have a whole range. We've got 160 different coins or tokens that we sell. So you can just come to us, buy cryptocurrencies, and also sell them back very easily. So an on and off ramp from fiat into crypto is the other way people describe it.
That's a good way of putting it. An on and off ramp from your fiat currency, so like your New Zealand dollar, your US dollar, etc. Put that in the machine, out pops up to 160 different types of crypto, which then gets sent to your wallet, and then you can do the reverse as well.
Absolutely.
Which is pretty cool. Okay. And let's have a chat though about Bitcoin today, because so much has happened in the last few months, and I think everybody is kind of accepting the fact that we are in a crypto winter of sorts. I still kind of hold out hope that maybe it's just a cold snap, and we'll come right soon. So with Bitcoin in particular, quite often when I'm talking to people about what is Bitcoin, like the very first thing that comes out of my mouth is, well, it's just digital money for the digital world. But what's your version of what is Bitcoin? Like, how would you answer that question to someone new?
Yeah, I mean, like you said, often gets wrapped up in the idea of cryptocurrencies more broadly. And my take on that is it's a digital way of transferring value. So we've got, emails let us transfer information digitally, or the internet does. And cryptocurrencies, blockchain, Bitcoin as an example of that, lets us transfer value digitally. There is a lot of different cryptocurrencies out there, and they have different use cases, different strengths and weaknesses. Talking about Bitcoin in particular, I mean, one of Bitcoin's great strengths is that it is the granddaddy of the space. It is the first ever digital currency, the first way that let you transfer value between two people without an intermediary, without having to go via a bank or a, lawyer or something like that. And so that's a real amazing benefit of Bitcoin. One of the things that always amazes me about Bitcoin is that in many cases, you have the first version or the first innovation in a space isn't the winner. So Google wasn't the first search engine. Facebook, maybe that's not a great example, but they weren't the first social media platform. Apple wasn't the first, smartphone, the first mobile phone. So you often find that someone will innovate something and then others will come along after and do it better. But Bitcoin, in my view, has really stood the test of time as being this first mover of an innovation, and that has really held up and is really still going strong today and is still the largest cryptocurrency by value.
Yeah. And what do you think that is due to? Do you think it's because the technology was in its purest form when Bitcoin was invented, or does it say more about the network effect, like just how fast that network spread and how it's more about the network rather than the actual asset itself?
So the Bitcoin network, it was sort of set out, and there's a bunch of code that's written that says how the network operates, and those are the rules that govern the network. And so no one can come along and change things, just do things differently, but the community as a whole can decide on changes. And we saw one of these changes quite recently, 6 months ago, with Taproot was one of the Bitcoin network protocol changes. With Bitcoin, though, these changes don't happen fast. They don't happen quickly. The community often takes a really long time to come to consensus. And so for me, that's possibly one of the limitations of Bitcoin, is that it doesn't move and innovate as fast as some of the other cryptocurrencies that have come up since. But those other cryptocurrencies that have come up since, they can move more quickly and innovate more rapidly because they have more centralized control, like fewer people participating, and sort of rules that are less democratic. So it is really a trade-off, I think, in cryptos around that innovative, fast-moving can make changes quickly versus being really democratic, decentralized, and very secure and safe, I guess.
Yeah. Bitcoin kind of feels like when you get really deep into the crypto environment, as deep as I feel comfortable getting, I often kind of feel like Bitcoin is the most boring asset out there. But then when I pull myself out from the weeds and I get back into normal town, Bitcoin in the traditional investment space feels dangerous enough. So we just kind of stay with that. And that's generally what I would recommend most clients is that, hey, when you're starting out, you just start out with Bitcoin, just play it safe because it is probably most likely to succeed, right? Like I would vote for it to be most likely to be successful in the new world that
In the
we're heading
yearbook.
into. Yeah, that's right. I'll sign away on the yearbook. And
to your first point, though, around like, we started this conversation before I dived a little bit possibly too deep into technicals of cryptocurrency, but, you started by talking about Bitcoin as being a digital version of money. And I think one of the things that it's useful to think about there is that, Bitcoin has its strengths and weaknesses, but in terms of being like money, it doesn't have many of the characteristics that we think about with money in terms of, it's not good for everyday payments. Like I would never walk into a coffee shop and shave off a tiny little bit of gold to pay for something. And in a similar way, Bitcoin's probably not, in its current format, the ideal currency for everyday payments. That might change over time. Taproot definitely will go a big way towards that. But Bitcoin at the moment sits more in a category that many people in the industry talk about it as being like a digital gold. So it's less of a transactional everyday currency and more of a store of value, something that you're using as a hedge against the market or as a diversification strategy. And in that respect, as you say, Darcy, 100%. Not that I would give any financial advice, but for me personally, I definitely hold Bitcoin, and I think it's if you're getting started in crypto, it's the best place to start. It's the pedigree, and it has a really nice niche in the market that isn't filled by anything else.
because Bitcoin, like you say, it's not necessarily a currency, it's more like digital gold. But is that not just another example of how Bitcoin shows us what it is? We can't come to it overlaying our own preconceived notions around what we think it should be, because it'll just slap us around and it'll just say, hey, I am what I am, leave me alone, right?
I feel like the markets have slapped quite a few of us around this year. So, Bitcoin in collaboration with inflation, rising interest rates, potential, world wars and recessions is, been a lot of uncomfortable territory.
Yeah. Okay. Well, on that topic, then, I wasn't going to go there just yet, but like now that we're talking about uncomfortable territories like wars and global recession and increasing civil unrest, maybe that hasn't happened yet, but in New Zealand necessarily, but watch this space perhaps. At some stage, you'd like to think that alternative stores of value start to look incredibly attractive when what we all know and trust and believe is mainstream starts to crumble a little bit. Or if we start to lose faith in the status quo, then what's alternative and experimental and a little bit edgy can actually look a little bit safe. So where I'm going with this, I guess, is the question of, we have traditionally thought of Bitcoin as a speculative asset, but in the world that it kind of looks like we're heading into, do you feel like this could be turning into more of a safe haven asset?
Yeah, I mean, should and is, I guess, are different things here. Like, in my view, Bitcoin really should be a safe haven asset, or it should become that over the coming years. One of the big reasons for that is, well, there's a couple of reasons, right? One is the non-inflationary characteristics of Bitcoin. So Bitcoin, when I talked about that code that sets it up and sort of what it's based on and the rules that govern it, in that code, there's only ever going to be 21 million Bitcoin or there or thereabouts. And that is very different from, say, the New Zealand dollar or the US dollar or most of our fiat or government issued currencies, where governments can print more and more money. And they have been, like, we've been seeing massive amounts of this money printing or quantitative easing happening over the last couple of years as governments have tried to spend their way out of COVID and also stave off recessions in their economies. Now, money printing is only a temporary solution, and if you do it too much, you end up with hyperinflation, as countries like Zimbabwe and others have shown. So what we're seeing now with really high inflation numbers in countries all around the world, and I think the inflation numbers are probably understated in the official statistics because they pick and choose kind of what they reflect in inflation figures, but that is a byproduct of the money printing. And so when you look at the US dollar, the New Zealand dollar, which are really inflationary, and then you compare that to Bitcoin, where there will only be 21 million Bitcoin. No one's going to be going and printing more Bitcoin or just creating more out of thin air. That should hold value as a hedge against inflation and as a good asset for diversification. And similarly, with the potential lack of trust in governments and institutions, and when it comes to things like the amount of debt that our global economy is built on, and a lot of countries in particular have huge amounts of debt behind them, there is questions of how long that can last, how long we can continue the cycle of funding growth through debt. And Bitcoin, on the other hand, there's no debt behind that. It is what it is. It is a system that you have to believe it has value, but so are all of our other monetary systems, right? Like fiat currencies, they work because we believe they have value. Even gold, the value of gold isn't about the abilities of that metal to be used as, a semiconductor and that sort of thing. The value of gold is because people believe that it has value. So all of our value systems are effectively based on nothing but a societal agreement and judgment, and Bitcoin's no different from that, but it does have some really good underlying fundamentals in terms of that lack of inflation, that lack of influence by third parties, and that sort of separation from government and from traditional financial markets. What I learned through keeping up with the crypto world, and if this is something that interests you, and it's a whole rabbit hole that you can go down talking to the audience here, but it's really interesting to look at some of the commentary that's coming out around our monetary system and the challenge that cryptocurrencies provide to that, and also some of those fundamental underlying concerns around debt. And there's a really great book, I can't remember the name of it, I can link it through to you later, but it sort of opened my eyes. It might have been one of the Yuri Naval ones actually, around the system that we have at the moment, the capitalist economic system that we use, which I was trained in as an economist going through university. It hasn't been around for forever. It's really only been since the Dutch Guilder and the advent of companies that came out of the Dutch moving into Southeast Asia that we really started to build what we use the system that we have now. And systems change, right? They don't change quickly, but they do change over time. And potentially cryptocurrencies will be a part of how the current economic system that we are living through might change in the not so distant future. Who knows? Could go either way. I wouldn't bet the house on it. But
yeah, that's true. But when you do kind of learn more about it, it not only does it kind of give you more of an appreciation of the things that you would have learned formally or informally, it also comes with a certain sort of, I guess, I don't know if you'd call it paranoia or some sort of baggage that, hey, you've seen something, you think it's real, but nobody else around you does. And I feel this all the time whenever I go there, whenever I think about this, I just think, well, man, is this really real, or am I just wanting to see something in this because I look at the world and just see how difficult things are out there? I want to believe. And so I've kind of turned it into something good, but at the same time, it fundamentally makes sense. 21 million Bitcoin, finite supply. Every time there's a disaster, somebody loses it, it's actually even more scarce. It's like all of the gold that ever existed is now sinking on all these ships. And whoever does.
And you don't have a Uganda going and finding double the world's gold deposits in a single day, right?
Exactly. Yeah. So it's to me, it kind of well, of course, it's just common sense. But then when I put on the way that I used to think, or the mainstream hat, I guess, I kind of still look at Bitcoin as it's a sequence rather than a cycle. It's got a beginning, right? It's got a middle, and it definitely has an end. And we're at an end right now. And every time the market collapses, it must be the end of Bitcoin, and it will never recover. But
never. It definitely hasn't every other time. And yeah.
Yeah, it's weird, But it's that revelation, knowing that it isn't a sequence, it's actually a cycle. It goes through ups, it goes through downs. So are we in a crypto winter right now, Janine? What do you think? Are we really in a crypto winter?
I think we are. I mean, I've sort of been expecting, at the start of this year when we had a big drop, I think in January, and then it was it's a short term, long term. But I think now we've been in it long enough. We've had some good gains in the last week or so. Bitcoin's back up to around 22, almost 23,000 US, which is nice. And, that's a lot higher than it's been around 18, 19 for the last few weeks. But I'm not picking this as a bounce back up. I think we're going to be, even if it doesn't get much lower, I don't think we're lifting out of this year. Probably shouldn't say any of those kind of predictions on a recorded podcast because you never know, right? But I guess what I'm building my business for and what I'm expecting is that we don't see an uplift anytime soon. I think there's just too much uncertainty in the world. And I think for crypto in particular, we talked before about this thing's a hedge against inflation, or at least it should be. it's interesting to me that we haven't seen it really fulfill that potential as being a non-correlated asset with the traditional financial markets, and it hasn't shown that that hedge against inflation has come through strong enough in the pricing. But a lot of the sort of what we think, or like looking at the market, the common belief as to what's driving that is that over the last 2 or 3 years, a lot of institutional money has flowed into cryptocurrency. And at first, for those of us in the sector, we're like, oh my goodness, this is amazing. The industry, the traditional finance industry is legitimizing crypto. They're investing in it. They put it on their balance sheet. That's a good thing. The downside of that is that when markets are a bit shaky and people are leaving risk assets for going into lower risk and just more stability, but cryptocurrency and Bitcoin is one of the first things that those big funds and those big institutional investors will drop, because they don't have the long-term belief in it. They were just here for the gains. So while retail investors will be holding on because they've got more of that long-term view and sort of hodl, I don't think you see hodl in the strategic plans of, say, the big JP Morgans and Citibanks and that sort of thing. It's more of a flight to safety, and that's, I think, what's driven a lot of the depression in the cryptocurrency prices.
Well, that's interesting. Yeah, and you can understand that, I guess, if you think about this, even in a traditional sense. If a fund manager held a whole bunch of different types of investments, they're going to get crucified over their performance, right? So they're going to want to shed those higher risk ones, which obviously is a self-perpetuating sort of disaster way of doing things. But that they kind of have to do that. There's a lot of pressures that drive them to do that. Whereas we, as individual private investors, I guess you could say, of Bitcoin, or holders of Bitcoin, we can endure. We can kind of, and I have myself. I've kind of gone from 15,000 down to 3,000, I think, and now from 65 down to 20. And like it's interesting. You kind of watch it go up and down like a yo-yo, but you don't have to actually.
Or better, you just don't watch. Like, that's my theory for getting through this. Just don't look.
Just don't look. It's a lot less painful. Yeah. But I guess it's like one of those things where, like, when I kind of talk to clients, I'm kind of looking at their overall portfolio, whether it's investment properties or KiwiSaver managed funds, individual shares, and Bitcoin. How I've kind of pitched it is, hey, a very small allocation to a very high risk portion of your portfolio, i.e. crypto, is a reasonable thing to do, as long as it's very, very small relative to your overall portfolio, because it may kind of alter the overall performance dynamics, and ideally you'll get some negative correlation, some zigs for the zags, ideally. But like you say, we haven't really seen that yet. We should see that. I personally still believe we'll see that big time. But for a lot of reasons, it's actually just not that simple. And the institutional investors, that's one of the reasons. Like, I think this time last year, on the topic of predictions, I think I was talking to Willie Woo around his call, which was around $200,000 to $300,000, I think, this time last year, and what it would have been 6 months ago. Obviously, that didn't happen. So I think making predictions on either direction, no matter how smart you are or not, is completely irrelevant, because again, Bitcoin shows us what it is. We can't tell it what it is, but it's cyclical. It's in a bear market. Let's say it's in crypto winter. What do you think it's going to take for sentiment to shift? What do you think it's going to take for the average everyday investor, or even the institutional investor, to kind of flip the switch and go, actually, no, we're buying, we're accumulating again?
Yeah, I think, there's two things that I view. One of them is, like you say, that appreciation of, hey, looking at an overall portfolio. And when I went to university and did a finance degree, diversify. That's one of the big things in finance, right? And so including Bitcoin or cryptocurrency as part of a diversified portfolio, that's a really good move. And that kind of, that should be more common in how we talk about investments, and having it as a common investment class that people are comfortable to diversify into within the right risk parameters for them. And the second thing that I think will make a big difference is just, as this stuff becomes everyday, real world, the use cases of, what digital money and programmable money can do for us. Like, that's what I'm really excited about, is bringing these things into people's lives. Whether or even not they know they're using cryptocurrency, it will become, increasingly part of how we just do everyday business, how we trade online, how we do all sorts of things that probably we couldn't even imagine today, because the opportunities and the innovations that opens up are really exciting. So that will have a flow-on effect of driving adoption, but really, seeing those use cases happen will be really exciting.
Yeah, and those use cases are going to be hard to predict, kind of like when the internet was starting to evolve, and we didn't really sort of see the interplay between the various platforms that could exist on the internet. and we didn't really
Absolutely.
understand the 1 + 1 = 100. We didn't really get that with the internet. With Bitcoin now, we kind of have that as a reference point, and we kind of know that. But that brings me kind of onto the next thing. Like I know that we can hold Bitcoin. We can hold Bitcoin a variety of different ways. And for me personally, I had a very small sliver of my overall crypto allocation on a platform to get yield. It was on the Celsius platform. And unfortunately, it's on that platform still, and I can't get it. And I want to just cover off some of the events that led to that, because I want to answer the question, is this unique to crypto, or is this just what happens sometimes during a growth phase of business? So from Terra Luna to Celsius, there's been a lot of events that have happened. Talk me through it. What's been the common thread here, or the common denominator between all these palavas?
Cool. Well, maybe I'll just give a quick view of what happened blow by blow, and then talk
Please.
as to the why it happened, because people, not everyone will be, I guess, familiar with this, but the crypto market has seen some incredibly catastrophic failures over recent weeks and months. And it started back in May, I think it was, with the collapse of Terra and Luna. So what these are is Terra, or UST, was a stable coin, which means it's a coin that's supposed to be stable in its value. This one was supposed to be 1-to-1 with the US dollar, and so it would always trade at about that level. There are different ways that people do stable coins. Some of them, like USDC, is an example of what I would consider a relatively safe stable coin, because they are backed by US dollars sitting in accounts which are audited, and they're held in things like government bonds and very low risk investments. Then there are other stable coins like UST, which were more algorithmic. So the idea is that they have ways that the system is set up that creates incentives for people to make trades that will keep the stable coin stable. Works all well and good while it is stable, but if it starts to depeg or lose that 1-to-1, you see what you'd call a run on a bank, right? So people lose faith in the system, and they try to take their money out, which has that, self-fulfilling prophecy that it makes the thing destabilize. In the case of UST, I think there were really clear reasons why this was not a good project, and a lot of commentators had called it out well in advance. So it wasn't just a traditional bank run where, perhaps the bank's fine, it just doesn't have enough money for all the depositors. There were actually fundamental flaws in how that project was set up. But what happened there is, so you had this coin that was trading at 1-to-1 with the US dollar, and then it, like, literally within a day, I think it was probably in about 6 hours, dropped down to cents on the dollar. And so people who had money in this currency lost pretty much everything, right? So people were losing their shirts, people were losing their life savings. It was terrible, but it also had some bigger impacts in that there were larger institutional or corporate investors within the crypto ecosystem that had funds in there. So that included 3 Arrows Capital, who were an institutional investor and fund manager, and it also included Celsius, who, Darcy, you were referring to. So Celsius are a company that let you deposit funds on their platform, and then you'd earn interest on those funds. And Celsius were receiving funds from people, depositing them in the Terra Luna anchor protocol, and earning like 19% interest, which, that for me was the very first red flag. The whole, if it seems too good to be true, it probably is. And I remember coming across these yield products, and I'm like, how are they actually making that much money? Like, who is paying the interest to justify that? And I could never get to the bottom of it. So, I was like, that's a bit, it was always a bit concerning. But they were investing their funds, lending them out at, getting 19% on the investment, and then paying out 12% and banking 7% profit in the middle. So big money. And Celsius was not a small player. I think at one point they had, Darcy, correct me if I'm wrong here, but was it like 30 billion US in assets under management? So they were a big player in the crypto system. One of the really big problems with Celsius, it wasn't even just the Luna thing. It was also that they had mismanaged their balance sheet. And this is where I guess get into the underlying reasons of why this happened. So what happened was Terra and Luna collapsed. That led to Celsius collapsing, 3 Arrows Capital collapsed, and Voyager collapsed. And they were all linked. There was this kind of domino effect that they all took each other down. But the reasons behind why this happened, excluding Terra Luna, which was possibly just a bad idea to start with, is that people were, firstly, they were investing in things they didn't necessarily understand the fundamentals behind. And in that respect, it's kind of similar to the GFC, that you had these complicated products that were wrapping up different things and then being repackaged. And we saw a bit of that happening in crypto. And, crypto should be a wonderful place for transparency. You've got blockchain, you've got smart contracts. You should be able to see through to what's actually happening. But instead, we had these really complex products being packaged and sold. And the second thing that happened was that companies weren't managing their risk settings right. And so a big part of why Celsius failed is that they had a whole lot of short-term deposits. So people like you putting money on the platform. Sorry, I didn't mean to call it out. Like, understand, like, it's hard to see what's going on here. But like, so people are putting on money for a short term, and the thing with Celsius is that you can take back your money anytime. But then Celsius was going in and investing that stuff in long-term loans. And so they had things tied up with the ETH 2.0, which I won't dive into, but it was locked up and Celsius couldn't get that money back. So depositors started coming to the door and saying, hey, we want our funds back, but the loans are locked up in long-term things. So that mismatch in your assets and liabilities. And similarly with Voyager, they were another company that has gone bankrupt over this, and they had 1 billion New Zealand dollars in unsecured loans to Three Arrows Capital. So again, just like what risk settings you have within a company to be in that situation in the first place. I think that's probably where most of these issues have come from. And it's a really big learning for the crypto industry. We are not as well regulated as traditional finance, and that enables things like this. Like, in a traditional financial service company, I don't believe you'd be able to get this level of mismanagement because you've got audits, you've got regulatory requirements, you've got product disclosure statements, all of these things that are put in place by regulators to help protect customers and make sure end users don't lose their funds. Doesn't always work, but it works a hell of a lot better for having regulation. And so I think probably off the back of this, we're going to see more regulation to try to get that kind of parity of safety for consumers.
Right. And most of us would look at regulation in the crypto space and just go, oh, we don't want that. It's just going to slow things down, make things expensive, and limit innovation. But I guess this is a really good example of how regulation actually really does keep us safe, doesn't it?
It's a real double-edged sword, because I am pro-regulation for keeping customers and end users safe, but I'm really against regulation where it hampers innovation, because what you talked about before about, we won't know what innovations we can do with this, right? Like into the early stage of the internet. Imagine if you started regulating the internet back in the 1990s and said the internet can do this, it can't do that. Like, there's no way we'd end up where we are today with like all of the amazing innovations. And even us having this conversation, like no one could have, forecast this back in the 90s. So if we have regulation that is prescriptive about what cryptocurrencies and digital assets can and can't do, we will stifle innovation so much and we won't realize the potential of these. Instead, I think what we need is regulation that thinks about, ultimately regulation is there to prevent harm, right? So what is the harm that is trying to be prevented, and how do we put on just enough safeguards for that, but not so much that it stops people from trying new things, innovating, experimenting, and learning along the way.
Mm-hmm. So, but just to kind of wrap that up, I guess what you're saying, just to compress that, is basically the sequence of events that you described there with Three Arrows Capital, Voyager, Terra Luna, and Celsius. There's a common denominator apart from Terra Luna, but it's really just financial mismanagement more than anything else, which exists in every space. That's not necessarily a symptom of just crypto, correct?
Absolutely. And I think, one of the big learnings we've had here is that none of the stuff is unique, right? Like what we see in crypto, we saw it with the GFC. We see it when, blue chip fund managers fall over. We see it when, people launch a Ponzi scheme, and it's all the same kind of issues. It's just a different layer of paint on the outside.
Yeah. Well, that's really good. Now, I want to kind of turn attention off to Easy Crypto again here, because again, 160 different crypto assets. I'd be keen just to understand what ratio. I don't know if you have visibility over this, whether it's just the new purchases that are going through at the moment, or whether you have visibility over historical stuff as well. But what kind of ratio exists between, say, Bitcoin relative to, say, Ethereum relative to everything else? Do you have a handle on those numbers?
Yeah, I'll just pull up our live data now. But while I'm doing that, definitely we've seen a massive shift over the time we've been doing Easy Crypto. So when we started, Bitcoin was by far and above our biggest selling. So it was around 70% when we launched. We did only launch with, say, 10 currencies. So there weren't as many to choose from, but still Bitcoin was, really the dominant in the market. Over time, we've seen that change, and Bitcoin's down now around a quarter of our trading volume is Bitcoin. And then sometimes Bitcoin slips off that number one position into number two, and Ethereum becomes our most traded coin. Looking right now, for the last 30 days, we've had Bitcoin at 31% of our volume. So it's back up a little bit comparatively to where it has been. And we see, Ethereum's usually number 2, and then we'll have US dollar stable coins because they provide a good way for people to, move funds into digital assets, whether they're wanting to use that for trading or say international remittances. I personally pay a lot of my staff using US dollar stable coins because it means I can remit money to them instantly. They'll get it within seconds. There's no bank fees, none of that. So it's a really, there's a real nice use case there. But overall, we find that maybe 10 coins make up sort of 80% of our trading volume. And then we have this really long tail of all sorts of other things. So, the 160 coins, most of them we will sell very, very little of. But I think there is something in that choice that really, it gives people a lot of opportunities to dabble in different things. And as things become more popular or drop in popularity, we've got them there to hand. Like a supermarket, but without any products in stock.
Yeah.
All products are available, but none of them have to be stocked, I guess, is maybe the way to look at it.
It's awesome. Going back to what you were just saying though there, Janine, around because you have operations outside of New Zealand as well as within New Zealand. So you're paying some of your expenses, wages predominantly, I assume, through USDC. Is that right?
Yeah, and a lot of so when we send money to, we operate in 4 countries, but we have staff in 11 different countries. And a lot of those countries, it's really difficult for us to send money to through the banking system. The fees are high. It might take 5 days for an international transfer. So wherever possible, we actually just pay things in USDC. USDC is probably, one of the more trusted stable coins, as I talked about before. And yeah, it's just a really seamless, easy thing. Like, I'll go onto the Easy Crypto website, I'll buy, $1,000, send it overseas, and my employee or my supplier has got it within seconds. And it's just a really eye-opening way of how great these changes are compared to the traditional financial system and how much benefit we can get as we ease into that adoption.
I think it's really cool because when you think of, say, cryptocurrencies, going back to that word that I don't like, but when you think about that, people are a bit nervous, or they think almost like they're experimenting with a new asset, and they are, yes, sometimes, but not necessarily with USDC or stablecoin. They're experiencing a new rails for basically US dollars. It's just digitizing US dollars and sliding it through a new way of transmitting it. So
exactly,
you can still, I think that's just phenomenal. It's like it's like almost like copper wiring that traditionally brought a phone line into your home now brings broadband into your home, and then it's obsolete. But it's interesting, like
and then
different rails.
Like fiber.
Yeah, that's fantastic. Keeps you regular. Well, that's a good chat though, Janine, and it was good to catch up with you again. There's one other thing I've been meaning to ask you though, and might as well ask you now. What's next for Easy Crypto? What are you guys working on at the moment?
The thing that we're working really hard on, which I will, I don't know if we've talked publicly about this or not. So let's say this is an exclusive for.
Let's say that. Definitely exclusive.
Exclusive. We're working on custody because this, I think, is one of the really big problems for crypto. Like, we've talked about, hey, we sell these 160 different cryptocurrencies, but you need to have your own wallet. And that's for people new to the space, that's a really complicated proposition. Back in the day when we started, everyone wanted to hold their own crypto, set up their own wallet, be their own bank. But now I think more and more people just want it to be simpler. And so we're not really living up to the name Easy Crypto without that, last mile solution of having the wallet. So that will be released later this year. Very excited about that. And then that opens up a whole new world of like what we can do to help people bridge into DeFi, to look at passive income, to offer things that are way safer than Celsius, but give people the access into that new ecosystem in a way that just really makes it super accessible and easy.
No, that's fantastic. And is that going to be a software-based wallet, a hot wallet, or is it going to be a cold device?
It'll be a hot wallet, so like a mobile app wallet. On the subject of hardware wallets and cold wallets, though, those are also, like, I personally use hardware wallets. I will continue to do that. I'll use the Easy Crypto app, obviously, but for larger amounts or for what you're storing, you can't go past a hardware wallet for security, and so. That's something maybe we'll have another session on one of those one day, but recommend anyone getting started in crypto is to explore that and sort of look at getting a hardware wallet just to keep yourself real safe. Yeah.
Awesome. Okay. Well, there will be a link in the show notes for those that are listening or watching. Just check out the notes in the description for a link to Easy Crypto. If you are thinking about it, and of course, none of this is financial advice, but if you are thinking about doing it, then I've been using Easy Crypto now for at least a few years. Awesome experience, no problems, fantastic customer service, by the way. If they're like, I send a
Because you have
question
my
and they
mobile
come up,
number.
that helps. But it's great. Anybody who wants, I'll give you Janine's number. I won't, but it makes a massive difference when you're starting out in something that's a little bit new. You're a bit unsure of things. Being able to pick up the phone or send an email and it gets responded to so fast makes a massive difference. So definitely recommend this.
And I
Awesome,
think
Janine. But go ahead.
New Zealand based also is really important. Like I think there are a whole lot of scams and frauds and stuff out there. So, when you get started in crypto, do make sure you're dealing with a New Zealand company. There are a few of us. It's not just Easy Crypto, but, we can really help protect and, help you look out, know what to look for and keep yourself safe, which is so important in this space.
Yeah, agreed. Awesome. Well, thank you very much, Janine Grainger from Easy Crypto. Thanks for joining me today.
Thanks for having me on. Cheers, Darcy.
All right. Have a good day.